Okay, good afternoon, everyone, and welcome to our class for today. Okay, so in today's session, the last time we had a strategy class, we looked at, I don't know how many of you were in the last class. In the last class, we looked at who can remember what we did, what we discussed about. Okay, well, last class was very, very interesting. People who were here learned a lot. I showed basically we looked at a number of things, but one of the key things that we looked at was how to understand, define the market, and in relation to profitability, yes, Y curve, how to get into the market, so entry confirmation using Y curve. So we broke that down. I broke that down. And to a very, there's this people, oh, Y curve, SND, everybody wants to trade SND, everybody wants to trade smart money concepts, SMC or something like that. And well, still, majority of traders are still losing, and even them, the ones who think they are trading smart money, they're still dumb money at the end of the day. So we looked at Y curve, and then today we're going to be looking at not a strategy in particular, right? We're going to be looking at the key fundamental to success in trading. And I would show you with examples, basically. And then I'm going to show you what you need to do for yourself as a trader if you want to make it in this business, right? So stay tuned. It's going to be interesting, and we are going to have a lot of fun. So remember, those of you online, if you have questions, just type it into the chat box. My moderator here would notify me when I need to respond to your questions, okay? Okay, so let's get straight into it. So first off, let's understand that when it comes to trading, there's always risk, right? Anything we discuss here is for educational purposes only. There's a reason why most traders lose. So you don't want to trade money you can afford to lose. However, a number of traders who make profit, and that's the reason why we're here. Okay, so this is just the disclaimer part of it. It's very important. The ANZO Capital, we are a forex broker, and this is basically a training. Okay, so who am I? My name is Nana Obina Alexander. I am the head market analyst here at ANZO Capital. I'm also the basically assistant director. Okay, so but they call me the FX JEDI. My primary job is I'm a trader. ANZO Capital is my best client. Let me put it like that. Okay, so you want to get to the point where you're making your primary source of your income is from trading, and that's the goal. If I decide to stop working for ANZO Capital, I'll be very fine. Do you understand? Okay. So you can follow me on, I think, Instagram, Twitter at FXJedi, and on what do you call it? So YouTube, it's no FX Pro. Okay, so let's jump straight into it. I used to be the head market analyst previously at Gemini Capital Markets and IV Markets. So here's what we're going to be covering today. Okay, so we're going to be looking at risk. Nobody likes to hear this. Now, for those of you, in short, everybody here, I can guarantee you that the thing that brought you into the market, the reason you started to be interested in learning to trade forex was because of profits, right? You saw, somebody told you, or you saw by yourself, somebody made $10,000, or somebody's living a lavish lifestyle out of trading, right? And you're like, I want to have this. This is the soft life, okay? Now, it's good. It's understandable. But the problem with that is we come into the market with one approach, with one idea that the market is there to give us money, right? Do you understand? So we enter the market with the belief that the market is there simply to give us money, okay? However, that's not the truth. That's not why the market is there. Do you understand? The market is made up of a number of things, a number of persons, a number of organizations, but you can break them down into two: profitable traders and unprofitable traders. The problem is, well, it's just like with everything in life, right? The majority of the finest, the choicest fruits is taken by a very small amount. There are many people in the pool, though. You can take it, you can take, for example, you go to a class, I remember when I was in school, well, there might be a class made up of 50 boys and 50 girls. So yes, ideally, you should have one boy to a girl. But what you find is there are 3 or 4 guys that 90% of the girls are after, right? Yes. That's how life works. It's just the fact of life. When I was young, my dad told me something. He said, See, Obina, if at any point in life you're unsure about what direction to take, I say, look at what everybody is doing. At least look at what the majority of people are doing and do the exact opposite. Right? Now, I will be frank with you, at the time, it don't make sense to me. It didn't make sense to me. Because why would I look at what everybody is doing and do the opposite? And he said, the answer is simple. You know, he tried to explain it for me then, but I only got it many years after I've grown up. The fact is, the majority of people are terrible at any specific thing you're looking at. If you want to group of people, a number of people, just take a random statistics and you gather 100 persons together. If you're looking for wealth in terms of who is happy, only about 10%. Who is doing a job that they enjoy, maybe about 10%. You know, how many of them are married? How many of them are having a happy marriage life? How many of them were good students? Now, each of these various categories, they are all different, and the numbers will differ from, you know, one person might be good at this, but bad at that. However, in each different category, the people who are doing very well as opposed to people who are not is like 90-10. Yeah. So that's why when you hear the statistics, 90% of traders don't make money. It's a fact. Now, that should not scare you, just because when you go to a class, well, 90% of students don't really perform well. Only about 10%. So maybe some are average, but you have very, very few who are the higher echelon, who are making the most, you know, most money or most progress. So just because most people lose doesn't mean there's no business here. Most businesses fail. Do you understand?
Yes.
You see big business, they are wonderful business. Do you know how many businesses have failed? If you go look at maybe Elon Musk, for instance, you know how many businesses he has started and has failed? But then you have one or two that blow up exponentially. So that statistic should not surprise you. And today I'm going to try and explain to you why that is the case and how you can, basically your job is to push yourself into the percentage of traders who are doing well. So we're looking at risk. Why you want to define risk, accept risk, eliminate risk. And then one very important aspect of trading, which involves avoiding unnecessary pressure. Okay. And then how you can define your edge, risk to reward ratio, and how you can stop destructive trading behavior. So this PowerPoint slide is not very long, but however, would break down when we go to the chat, as I hope to try and explain to you how you can build your own trading system. Okay. Now, next slide. Okay, so let's begin by looking at risk. Now, this is the one topic that most traders don't like to hear. I can guarantee you that most of you who saw, what strategy class they were interested, they came here for the sole purpose of learning a strategy. Oh, if I learn this strategy, it will make me money. Right? Yes. That's what, if I know why people is important. So this is so nice when you're showing anything can work, especially I can make up something that will work, and I'll just show you some very, very selected examples, right? And then you're like, man, this is what I've been looking for all my life. Do you understand? Well, at the end of the day, when you go and apply it, it feels like what I ordered versus what I got. So risk management is the only key to successful trading. Like, it's the primary key to trading success, and which is why it's important to know this. Now, to be successful at anything, you need a good trading plan. You need a good plan. If you own a business, right, and you're seeking for investors, the one thing they ask for you is, where's your business plan? They want to see your business plan, see, okay, what is this projection? What does he have? They want to see very intense details as to how you're going to run the business. Now, it's from that business plan they will judge whether, okay, let me invest in his business. Let me give him the money to run this. But people approach the market as though, like I said, there's money that they kept that they were coming to collect. Do you understand? And then what happens is they enter the market without a plan. They watch a video on YouTube that shows, bullish pin bar or candlestick patterns or trend line, and they're like, this is what I've been looking for. And they jump to the chart, fund their account, and open trades. Most of the time, they take a trade and they make profit. Like, this is what I've been looking for. And the next thing they keep, before you know, 3 weeks later, zero. Am I speaking? Am I lying? Anybody? Am I behind? Is there anything I'm saying here that is out of place? Well, if you think so, just let me know. Okay. So, but this aspect of trading, to approach trading, right, from the point of a business is what will give you that edge. You want to approach trading like a business. Now, how many of us here are professionals? So a good number of us here went to school. We studied medicine and surgery, or we studied engineering, or we studied with lawyers or something like that. So we went to school and we came out. So we're working. I'm hoping that a number of us here we're all employed, either self-employed or employed, but we're doing something, we're earning money. Now, let's say you studied law, right? So let's say you studied law. You went to university, spent 5 years. You come out, they give you a degree, you go and find a job, and you're working. And then let's say they are paying you whatever amounts they are paying you. Just for simplicity's sake, let's say they are paying you 200K, right? Now, what did it take you to earn that job? If I ask you what it took you to earn that job, what will you say? People will say, well, online, you can always obviously type in your answer. I want to see your answer. But what do you think it takes you to earn the job?
The process of educating yourself, the career, the time. Because there's a job, to get the job, you must have the knowledge for the job. So when you're able to accumulate and get the job, the knowledge, you now went for the job, you now got it. So that's with investing in the knowledge to get the job.
I agree with you. Let me see what people are saying online. They're saying certificate, good skill. Well, what did it take you to get the certificate or the skill? Now, you have to go to, what we usually look at is the 4 years or 5 years you spend in school, in the university, to become a lawyer. However, to get to the university, you have to go to secondary school. To get to secondary school, you have to go to primary school. So go to primary school, you need to go to nursery. So if you add it up, you spend like 20, 25 years to become a lawyer, to get a certificate, or a doctor, or a medicine, or, So you spend we're spending between 20 to 30 years studying so that we can get a degree to get a job. Now, all good and fine. I went to school, I came out first class computer science. However, when people approach the markets, right, the forex markets, they come in contact with the forex markets from the trading, from something online, or from somebody says I'm making money. However it's the case, they learn 1 or 2 things, they jump into the markets, and they hope that in 2 months' time, they are as profitable as I am. Hope you should be that. Are we together? Those of you online? Do you understand my point? So the truth is, there is a process in everything in life. I'm here trading. I'm here talking to you today. I'm sure you saw. I don't know whether it was in my biography. I've been trading for 9 years, right? Now, the truth is, out of those 9 years, the majority of them are wasted years because I was just jumping up and down. I was looking for what you're probably looking for. Hoping to find the holy grail of trading, hoping that I will one day turn my $100 accounts, to 1,000, and then turn the $1,000 accounts to 100,000, and then turn the $100,000 accounts to 1,000,000, and then live large. That was the dream. Now, I did some of those, like I turned the $100 accounts to 2,000 and stuff, but most of the time you make the money, you're happy, you're excited, maybe you make some withdrawals and then you lose it all. You fund again, you're going through this rat race, you're going up, down, up, down, up, down, which is fine. And I call it, school fees. You're paying school fees, right? Now, my job, the thing for me is you're going to go through that process. I cannot take it away. But what I can do is to help you shorten that process, right? By, helping you to see what is actually needed. Because otherwise, you just do what every other person does. It's the same reason. Everybody hopes, when we were young, everybody hopes that by the age of 25, that we own a house in Dubai. You know, when we were 12 years old, and you think, oh, by the time I'm 25 like this, I'm married, I have 2 kids, or something like that. You think, oh, I have a Ferrari and I'm driving like this and I'm doing that. We all hoped that. But at 35, many people are still struggling. And the funny part and the painful part is that even till they die, the majority of people would never, ever attain their childhood dream. It's not a curse. It's not a swear. It's just a fact. And the truth is, the main reason is nobody showed them what to do. Or even if somebody showed them, maybe they didn't do it. They didn't discipline enough to follow it. But most of the time, so even people who succeed, in most cases, they do it unconsciously by following the right habits. So for instance, you know, like myself now, the reason, you know, I got to the point where I am in terms of trading is because after so many run around, you get from here, you learn, and then you start to, streamline. Okay, what works, what doesn't work, and just, you know. So now, well, what I'm offering is, my dad says, the dwarf, right, that stands on the shoulders of the giants, he sees farther than the giants. He doesn't see like the giant, he actually sees farther than the giants. Now, what's the importance of that? Well, you're here and you need to be here. The difference between this and this, you can either, you know, try and do all of the wahala, or you can just find the ladder. And usually the ladder is somebody who has done it before. And then is giving you, who is willing to offer you the opportunity to, okay, look at what I did, look at how I did it. All the mistakes I made, see them here, but don't make them. And then you're like, okay, avoid this, do that. Okay. So in the same vein, you know, you'll be able to learn from other people's experience, but you have to experience it yourself to be a trader. Like, I can sit you down and teach you everything I know about Forex. You would still not be profitable. If you think that just by downloading everything I know into your brain, instantly you will now do exactly what I do the next day. No, you wouldn't. Because you need to experience it, practice it, and then you now, become your own person. So at the end of the day, you're not going to try and become that trader or that YouTube or Twitter trader, or you're not trying to become that person. You have to become your own person, because we're all different. Some of us, our risk tolerance is very high. Some of us, our risk tolerance is not that high. Some of us, we have so much time to just sit in the front of the market and look at the charts. Others, we have jobs that we love and we just want to trade part-time. So this is actually part of the reason I don't really like signal trading. So go to this, I will buy this at this point, sell, stop loss here. You would never learn. Do you understand? You'd never learn. You just be, you know, it's like, they say, show me how to fish instead of just giving me fish. Okay. So let's progress. I've spent a number of time here. Okay, so what do I have here? So you want to be, as a great trader, to be a great forex trader, you need to understand your risk. Okay, so your risk is in capital letter here because it's specific to you. Okay, now success in forex trading is largely dependent on your ability to be able to take unemotional, decisive action over and over again. Write that down. Success in trading is largely dependent on your ability to be able to take unemotional, decisive actions over and over again. Now, there's a lot in that statement, but it's quite simple. You know the reason why Forex robots are very appealing these days? You know, everybody's trading with, everybody's looking for that robot. Now, I'm not a very big fan of robots, except the ones I built myself for my own use. And even the ones I build that I use, they're not used like plug and play. I use them specifically for certain things. Now, here's the thing. But the thing about robots is you give it instruction, right? You give it instruction, and then it just sits down and look at the markets. Do you understand? It's just watching the markets. Anytime, so it's like a dictionary, you know, a directory for those of you in computer. So it has a directory that is looking at every single point in time. Now that directory contains the information that you put in there that says, look for this or this or this. And if you find that, do this and that. Do you understand? So he's looking at the charts with his dictionary. And anytime he finds the criteria that is on the dictionary, it will do what it's supposed to do. And it will do that over and over and over again. Now, there's a good part to that. There's also a bad part to that. It's the reason why most robots will blow accounts, because they'll still keep doing the same thing, over and over again, even if it's losing. Do you understand? But that ability to be able to take unemotional, decisive action is actually the key to trading. Now, all of us here who are traders, we've learned a lot of things. We have, we've learned lots of strategy. We've learned pin bar, we've learned candlestick patterns, we've learned trend line, we've learned support and resistance. We've even asked, they've said, no, support and resistance, that's retail trading doesn't work again, right? Let us start trading smart money, SMC, and everybody's learning SMC. Oh, other block, Wyckoff, this and that. However, they're still losing. They make some progress, but then they lose. But then I can tell you that even a simple, the most simplest system can make you money if you build, what I say, how do I put it now? If you take the time to gather the information, right? And then be comfortable with that information to then execute it. So I'm going to give you, how to explain you, now, this is where those of you online will probably a little bit. Let's see. Can you see my whiteboard? Okay, so can you see my whiteboard? Okay. I'm still waiting for your replies though. Okay, so now here's the thing. Let's see. We have the replies coming in. We are seeing it halfway. Okay, halfway. Yes. Okay, so now where was I? Okay, so now I was saying that any system can make you money. Any system, and I'll show you, right? Any system itself can make you money. Whether you're trading simple moving average, right? Or you're trading smart, Fibonacci retracement, or you're trading, if you see two buy candles, you buy. Whatever it is that you're trading can almost make you money if you test it enough and then make up your mind with regards to that system. Now, if I ask how many of us here have trading journals, or if I ask how many of us here know or have heard about trading journals, I'm sure everybody here who is a trader will say yes. But then if I ask how many of us have a trading journal, that number will go from 100% to like 20%. Now, if I ask how many of us in those 20%, right, use our trading journals for our trades, then the number will go to like 2% or 1%. Then you wonder why you're struggling, right? Everybody knows about trading journals, right? And then everybody who knows about trading journals that have one understands the importance, but very few people even use it. So what happened is they show up to the market emotional, right? So now, remember, one of the things I say we're going to discuss today is on building yourself, building your own trading plan, right? So building your own trading plan. Now, the reason it's not, look at how I trade. Somebody will say, oh, tell me how you trade. The truth is the way I trade has evolved and it keeps evolving, right? The way I trade last year was not the same way I trade this year, but I was profitable last year. Do you understand? Now, your trading plan is something that so let's say you learn a new concept. Somebody says, okay, look at the concept of support and resistance. I'm going to use this, support and resistance. or moving average crossover. Okay. I'll say, well, look at the idea behind look at this particular trading system. If we have two moving average, let's say 10 and 20, right? And they cross over each other. If the 10 moving average cross above the 20, buy. If the 20 cross or the 10 cross below the 20, sell. Now I'm not giving you a trading plan to use. You don't take anything and then just go and use it. You take it, you learn the concept, and then you test it. At least try it out or test it out. When I say test it, I don't mean go and test it in live markets. I mean go back to your charts and see how you would have traded it. Do you understand? Now try it out at least 200 times. Then make a record of what is the results. Okay, how many trades did you win? What is the expected value and all of those things. Now let's say a simple trading plan of moving average crossover. Alex, check there's another color of marker. Okay? So we are saying if the market is bearish, right? If the market is bearish, and then we have moving averages like this. Okay. Usually what happens is, let's say the market becomes bullish like this. What we'll find is one of this moving average will, that was previously above price will now somehow suddenly become below price. Okay. So we're saying that, well, if this red moving average, this red line, if it is a 10 exponential moving average, and then this blue one is a 20 exponential moving average. Okay, so this one is 20. Just this simple stuff here now, right? We're saying, okay, if we're using the crossover, that means the points where they cross each other as our entry criteria. Meaning, at the point this happens, the candle, at the close of the candle where this happens, we want to open a buy. Okay? So open a buy. And then we say, okay, let's say this is the candle where it happens. We open, or let me say here, we open a buy, right? And then we say we use a 50 pips or a 100 pips stop loss, whatever stop loss. Now remember, we're just testing, we're testing. Okay? So now, let's say we use the 20 pips stop loss. And then we use a risk to reward. So this is another important aspect, the risk to reward ratio. So we use the risk to reward ratio of, or let's say 1:2, right? So 1:2. So we're risking 1, we're trying to make 2. And then when the crossover happens the other way, so we now have the market make bearish, and this begins to do something like this. Right? Then we use this as a selling signal. Okay, and sell from there, stop loss, take profit. Is there anybody that doesn't understand the idea behind this system? Very simple. Now, if you trade, this probably won't make you money, except you figure out a way to use it yourself. Now, it can make you a lot of money. But it might, it has to be the type of trader you are. They are very simple systems like this. And some hedge funds are just load billions on top of this thing. And and then the market just goes to but you don't have that kind of money, I don't have that kind of time to wait for your trades to play out. So this is that particular system. I know work for you. There might be a system that makes you 10% per year, but you're not okay with 10% per year because, well, you're trading a small fund. But somebody who is trading, I don't know, 1 billion is probably okay with 10% per year. Do you understand? Or 10% per 6 months, something like that. So this is why it's about you building your trading plan. It's not about me teaching you, look at the plan here. Do you understand? Okay, so now this is supposed to be the simple system, right? Now, whether this will work, whether this will make you money or not, is anybody's guess. But until you test it for yourself, right? You never have the confidence to trade this. Because, well, if I show you 2 examples, I can go to the chart now and show you 2 examples where the thing meets. I can just make it risk to reward of 1:10. And it's just one or 2 or 3 trades, and it's just go from. I'm like, man, this is it. But then what happens is there'll come a time where the market begins to do something like this. And then the moving average is just crossing like this. right? So it will buy here, it will sell here, it will buy here, it will sell here, it will buy here, it will sell here, and all of them will be lost. Abi? And then you'll be like, this thing doesn't work. And then you know what happens? They will jump to the next YouTube video to learn the next strategy. Do you understand?
Yes.
And then that one will work for a time and then stop working. And then they'll jump from that one to another. And then work for a time and then it stops working. It's, and then they jump from that one to another. Now, it's funny. It's a cliche of nihilism. That's just how people function. It's the truth. And then if you want to take yourself away from the rat race, then you need to be different from the other rats in the race. Okay. Don't worry, we'll come to that in a bit. I'll show you some examples. We'll use this example now. So I'll show you some examples. So let's just go to the next point here. Those of you online, I hope you guys are following and I hope you're enjoying the class so far. Okay. Now, position sizing. What's that? Yes, okay. Now, next point we look at is basically risk to reward ratio. Now, a number of us, how many of us as traders, we open our charts, right? This is what happens to most traders. They open their chart. They wake up in the morning or whenever they have time to look at the charts or whenever they want to, they open the chart, they look at Euro USD. They see the markets. The market does, they just open their chart and they're looking at the chart and next thing they see very big red candle. Right? Very big bearish candle. And then, let us sell. Or okay, if it comes up, I'll sell, or let us sell at this moment. And then they sell. Maybe it goes down and they make profit. Or it goes up and usually they don't use stop loss. Okay. Right? So, and then if they make some money, they're happy. So let's say the person has $1,000 account. So account size 1,000. Okay. They look at the market, they see that this market is bearish, or the news has just come out. It is bad for the dollar. Let us sell. Right? Let us sell USDJPY. It's going to be down. They sell that $1,000 account. And they sell, as they want to open the trade, they just open 0.1, right? Or maybe 0.2 or whatever it is. And then the market goes down. Maybe it goes down 50 pips. And then on this 0.1, they make $50. Right? Yeah. They are happy. Like you went, hey, sure. Now the next time, and the news comes out again, right? But they look at it, and then you know what happens most of the time is they make $50, but their friend made 500. Right? Okay, so the next time they look at it, the news comes out. The same kind of setup, maybe this time is bullish. The news is good for the dollar, and the dollar is expected to go up, and they see it, so they can do and buy. The account size is maybe 1,050. They use 0.2. Okay? The market goes up 50 pips, right? They make $100. And like, this is what I am talking about. Okay? And this is like this explanation here is actually why I don't give trading signals. That's why I don't like the idea of, you have those Telegram channels or those groups where they say buy here, stop loss here, take profits here. The bad thing about those groups is not when the signal don't work. It's actually when the signal work. So when I was with Gemini Capital Markets, so GC Markets, there was a Telegram channel. I was sending out daily buys and sells, and after a couple of weeks, when I started the group, everything was going very fine until a few weeks later. Yeah, now people, when I was having live classes, would be like, man, I blew my account. Like, how did you blow your account? You say, man, I took your signal, my signal. I don't understand. But Mark, you took my signal, you blew your account. How did you blow your account? I said, now after the first week, you gave us 10 trades. We had 7 wins and 2 break-evens and 1 loss. The second week, it was still the same kind of scenario. Well, the third week now, I know that you know what you're doing. So when you gave the signal like this, on my $1,000 account, I used 2 lots or something like that. And they're like, well, at least I know that if this thing goes and hits profits, because he knows what he's doing, what will happen? I'll double my accounts. And then your village people visit you. And that trade is a loss. Maybe you lose half of the account. So you go from 1,000 to 500. I know the bad thing about losses like that is they rape you mentally. Those kind of losses, they rape you. Because now, even if you double your new account size, you'd only be getting back to your previous balance. Do you understand? And so chances are you're most likely going to lose the remaining than you are going to gain back what you lost. So people go into the market with the expectation that they are going to make profits. Now, I'm a very optimistic person. In life, I always see the glass as half full. I always see the best in people. You almost never find me angry. However, when it comes to the markets, I'm very, very pessimistic. My expectation is that I'm going to lose. I open the market, I see what I like, I place a trade, and I expect that I will lose that trade. That's the expectation. Now, the reason that's better than what everybody or what most people do is you open the market, they place a trade, they expect to win. Now, if you think that you're going to be right, will you limit? So if somebody comes and tells you, let's say I work with the central bank, or I work with the Federal Reserve Bank, and I tell you that the news is coming out, this is what the news is going to be. If you buy it, there's no guarantee. If you want to take that trade, will you use small lot size? You double it now. If you receive a dream and you believe God is telling you that Euro-USD is going to go hit 2.0, when you open the trade you're not going to open it with conscience. Do you understand? Because you expect to win. And then when you win, well, it reaffirms, it becomes a self-limiting, defining prophecy, like it becomes its own self-fulfilling prophecy. And so with that expectation of winning, people go into the market forgetting that there is risk. When I tell people, oh, there's risk in trading, they hear it, but they don't hear it. I said a disclaimer here. Very people have forgot. They hear it, but they don't hear it. They're like, oh, people lose money in the forex market. Hey, it's not my portion. Do you understand? And that is how well, you don't want to lose, then don't trade forex. That's the simple truth. Somebody on the what's the name? Kelvin said he doesn't want to lose. You don't want to lose, then don't trade forex. It's not a business for you. I go into the market going after losses. It's very funny, but it's very true. Now, I'll show you why that's kind of understanding, that kind of approach to the market is better for you. Okay. Now, almost anybody can be successful in this market if they gain the confidence based on their own experience, not my experience. If your belief as to whether you'll be a good trader or not is dependent on me, you'll never be a good trader. Because, well, you don't even have the convictions for yourself. Just like, oh, okay, let's say you're a Christian or whatever, and then you're like, your father or your mother is very strong in the faith. That doesn't translate to you. You have to build your own faith by yourself. If you're going to, let me see what they're saying. I want to lose small, they come back strong. Okay. So if you're going to be strong in your own self, you have to make up, you have to make your own faith. You have to strengthen your own faith. Same thing. So now imagine if I give you $100,000. right? You have a $100,000 account. And then all you have to do is take a specific trade, right? So moving average, this moving average crossover we discussed now. Anytime you see a moving average crossover, take a trade, right? Depending on whether it's a buy or sell. Use a 10 pips stop loss, use a 20 pips take profit, something like that, right? And then for every trade you take, your risk should be 1% of your account. Now, do you know how many trades you would need to lose back to back to back to back to blow their account? You would need to lose 100 trades back to back. Now, what are the odds that you lose 100 trades back to back? It's very slim, except your village people are very strong. So the odds of that happening is very slim. Worst case scenario, you get 7 back-to-back losses. But see the point here. Now remember, we're risking 1%. We're going after. So 10 pips stop loss, 20 pips take profits, right? That means for every $1 that is at risk, we are trying to make 2. Do you understand?
Yeah.
And we stick to this. We stick to our trading plan. Now, let's say we take 100 trades. That's the total, the number of trades that it requires for us to blow our account if we lose back to back. Right? If you take 100 trades, the odds are we're not going to lose 100 trades. You know, even if your system is terrible, you will lose 70. You know, as if you're following the system like that, though, even if it's 20, like even so you will lose 80 or 70. Do you understand? But even if you lose 80, right? Let's say you lose 80 are losses, and then 20 are wins, right? Well, for these 80 losses, you would have lost 80% of your account. But for these 20 wins, you would have made 40%. Do you understand? Because for each win is twice your loss. By the end of the day, your balance will be, do the math. So you have like 40% of your account left. Right? Now, the truth is, if you're testing this, right? If you're testing a system, if by the time you do it 100 times, you start to see patterns. You start to say, okay, it's like 20 pips stop loss. It's like 20 pips stop losses. It gets to 21 pips and then it goes my way. You're trying to figure out, okay, what is the balance? Now, the problem most of the time is people, when they make losses, they are trying to see how to take away the losses. They don't want to make another loss. But that's not the fact. That's not the point of trading. The point of trading is how to maximize your wins, maybe reduce your losses. So when you're right, you want to be very right. Or when you're wrong, you want to be a little wrong. Do you understand? And so if you have a system where whenever you have let's say you notice a pattern or a strategy, a system that whenever that system aligns, the price moves around 20, 30 pips. You cannot say, okay, I'll watch for this condition. Whenever this condition is met, I'll try and go after 40 pips. Okay, what is the expected risk? If it usually moves like when it wants to move and it moves 40 pips, it usually doesn't go, when the system aligns, doesn't go below 20 or 10 pips. Like, what if it's 10 pips? No problem. So you see how you're defining your own system yourself because of your experience. Not because of Obina said we should buy, but because of your experience, you now begin to, okay, this is what works. You start to refine. And then let's say you get to the point where, let's say for every $1 risk, you're trying to make 4. Right? Right? So let's say when our system align, we take our stop loss is like 10 pips. Take profit is like 40 pips or something like that. Okay. Now we still lose 80 trades. For the 80 trades, we will lose 80%. Right? But we want 20 trades. For the 20 trade this time, we will make 80%.
Mm.
So you see, have we? Now, we've not done anything drastic. Do you understand? We've not done anything, we're just playing around our risk. We've not done it. We're looking at the system, figuring out what might work best, and then playing about our right?
Mm-hmm.
Now, if you obviously, as you take more and more trades, by the time you take the next 100 trades, you start to say, okay, maybe when the moving average cross over, right? And then maybe RSI is overbought or not over, I'll probably stay away from the market. So you start to figure out where to stay away from the market, where to get involved more. Not because maybe you reduce, this to like let's say you reduce it to 60%, and then you increase your win with like 40%. And all of a sudden, you're losing when your 60 losses will give you 60%, but your 40 wins will give you 80%. Wow. You're still losing more than you win. Mm-hmm. Do you understand? But your wins have more value than your losses. Now look at how most people trade. Those of you online, if I'm telling a lie, let me. That is how most people trade. They see something that they like. Usually, they don't even have a specific thing that they like. They just see something that they like, or they see the news, or they just see the market going up, and then they just buy, right? So they place a buy. Usually, no stop loss. Even if sometimes they have stop loss, but then the market goes up like this, right? They close it and take profits. Do you understand? They're happy. The next time they open a trade, they buy. Right? The market goes down like this. They will not take it so. They are buying them. No idea behind. The market goes down. It went up, let's say this is 1%. It has now gone down 1%. Right? Yeah. They close the profit here, but then the loss. No. This is manipulation. Smart money is trying to manipulate the market. I would look at the support line, start looking for the next level. Okay, this is the new level. So they'll shift the stop loss down. Do you understand? Now, this would have been $100 loss.
Yeah.
By the time it gets here, the loss is now $200. The account size is $1,000. If I lose $200, I'm left with $800. No, this thing will go up. And the funny thing about the market is the market will do something like this. So let me, for those of you online, so you can let me draw. So this is your, they bought here by, the market is now here. This is where the stop loss was supposed to be. The market is now here, it's now getting here. They shifted the stop loss down here. Okay? Then the market gets here, now begins to do something like that. Like, I told you. Do you understand? And then the stop loss will hold. You know what they'll say? If I buy again, by the time it gets to this entry price, I'm already in profits. So they will buy another one. Right? Then the market will start to come down. By the time it gets here, they will shift stop loss. So they will remove it entirely. I'm speaking some people's mind, I mean. So they remove it entirely. This is where it should be. Right? The account is $1,000. The current drawdown is $600. And then if they are reasonable enough, they will close it and take the 600. But most times they're like, no, how would I lose $100,000? It will go up, You understand? And then maybe the market begins to go up. Now let's say that in most cases, what we'll find is it might go up by the time it comes back here. So they will now close the market, the whole trade. Maybe they'll close it somewhere here for a profit of $50. Right? Do you understand?
Yeah.
So they now close the trade for a profit of $50 here. Now, psychologically, they are happy. They made profits. That's all they will remember. However, do this 3 times and you blow the accounts. Let you like this scenario now. This is the reason why most bots blow account. When I see those bots that just trade and make you crazy returns, If you have money, they just keep taking your profits, especially if the drawdowns are insane. You understand? That's the key thing. It depends on how it trades. Because if you keep flirting with blown up, if you keep flirting with the market would answer your call. Do you understand? And so this happens 1 or 2 times. They're like, it's normal, it's normal. Now here's the thing. Most people think my account size is $100. If I have $100,000 account, I will trade differently. It's a lie. If you don't figure out how to trade with rules on a $100 account, you do the same thing on a $100,000, on $1 million account, you do the same thing. Because you assume that you cannot blow the money. You know, somebody who is trading $100, you think, man, I can never blow $10,000 accounts. Me, I have blown $10,000 accounts. Do you understand? And so it's nothing. Until you start to focus on the risk aspects of trading and understand that you are most likely going to lose, then you now begin to open the upside potential for yourself. You know, somebody once said, if you watch the bottom line close enough, the top will take care of itself. So now, what's the ultimate lesson here today? Well, the point is, I don't care what system you're trading. Whether you're trading SMC, you learned YCOP the last week and you're interested. Whether that's how you want to trade, whether you're trading pin bar or engulfing bar, doesn't matter. Right? If you take the time to backtest it well enough for yourself, right? And then make up your mind as to, based on this is where journaling comes into play. Right? When you see, okay, these are, and then you start to filter out. You might even something as simple as you have a system, you usually take profit at 1:2. But then you notice from your back testing that usually the market goes to, let's say, 1:5 most of the time. Then you're like, okay, maybe 1:5, you might now adjust, okay, maybe at 1:2, I'll take some partial. Let some of them to run to 1:5. Something as simple as that can change your trading. And the story becomes quite different. So position sizing is very important. Most people, they just have, I'm using a $100 account. Any trade I'm taking 0.1. But using risk to reward ratio involves looking at, okay, what is my stop? Where is my stop loss for my entry? If my stop loss, so let's say I have a $100 account, sorry, $1,000 account, okay? And I'm only willing to risk 1% per trade, right? Well, that means that 1% of $1,000 is $10. For every trade, I should not risk more than $10. Now, if I see if my strategy, if my rules are met, right? So let's say that my strategy is I'm trading, what I use now, pin bar, right? And candlestick patterns, right? So let's say I'm trading candlestick patterns from level of support and resistance, something as simple as that, right? Now, if my rule is that if I'm at a level of resistance, right, and I see a pin bar, a bearish pin bar, or a bearish engulfing, so you have maybe a bullish, and then you have a bearish, right? So if my rule is from a level of resistance, I look to sell this signal. And then from a level of support, I look to buy, obviously, you understand, the opposite. Okay? And then my stop loss would be above this high. And I will target 1:2. Or let's say 1:4, whatever. Let's just say 1:2. Okay? So this will be my SL, this will be my CP, and I'm going to enter at the close of this candle. Right? Yeah. Now, if we say this is the pin bar, if from this entry to this stop loss is 20 pips, and my account is 1,000, and I'm only willing to risk 1%, which is $10, I'll ask myself, what lot size would I need to use such that if price goes and hits my stop loss, it will not be more than $10. So if it's 20 pips, but if I use 0.1, if I use 0.1 and it goes 20 pips, that's $20. That's more than. So that means 0.05 give me $10. Now sometimes it might not be exact. So if I cannot find an exact pip value that will give me 1%, I'll use below 1%. Do you understand?
Yes.
So that means I'll use 0.05. So now if this market goes and if I walk away, I know that what I'm risking is $10. If the market comes and hits my targets, I make $20. My account size now becomes 1,020. Well, 1% of my new risk is now you can do it you can do it multiple ways. For me, because I have specific entries and I have my own bots that I built for my entries. Well, it does the calculation for me, right? Now that one is proprietary to me. However, you can say, okay, between what you can do to simplify it is so that you don't keep doing calculation of 1%, because now 1% of 1,020 is no longer $10, it's now something like, so if you do the maths, it should be like $10.2. Do you understand? So what I usually would do then is I'll say between 1,000, so if my account is between 1,000 and 900, right? For instance, I would still use the same, I'll still be risking $10. I don't know if you get my point. Now, if the account, let's say if it gets to the upper band, so it gets to 1,100, then I'll not factor that in. Or if it goes below 900, then I'll reduce it so that you don't have to keep calculating up and down. But then just know that, okay, if I'm risking only $10, what lot size do I need to use based on my stop loss so that it doesn't get more than $10? That's how. So once you factor that in, and then you make sure that you have a positive RR, right? So you have a positive RR. So by RR, I mean risk to reward. That means you're risking $1 or 1% to make 2%. Now, the reason for having you can have a system where you're risking where your RR is 1:1. No, a lot of these forex robots, their RR is like 1:0.05. That's what they scalp. They get into the market, they hope the market will just go 2 pips and then take profits. But then when the market doesn't go that direction, it starts falling down. So basically, they're risking all the accounts to 0.05. Do you understand the point? And then most of the time they will martingale, then they martingale, and then martingale. But now it can work. You can have look at probability. If this is price, right? And if this is where price is, and this is your target, there's a good chance, there's a very strong probability that price will just go on top of that target. If your target is here, chances is lower. If the target is here, it's even lower. Do you understand? So that's why you see them to take profit. However, when this doesn't happen and this begins to happen, that's how bots run out of steam. That's how they blew account. That's how whether you're not even traders, that's how it's done. People lose money because if you have a negative or a very small RR, there are good chances. Like if you say I'm going to open a buy at the close of every candle, and then if price goes up 2 pips, I'll take profits. There's a very good chance that at the open of every candle, the price will go up 2 pips. But the problem is when it just opens and falls off, then you now have a challenge. You understand? So it's you can at least you want to have a positive RR 1:2. Now you can use a neutral RR like 1:1, but then you will need a high win percentage. So there's a difference between win ratio and win percentage. So let's say if you win 8 out of 10 trades, your win ratio is 80%. Right? Now let's look at it. If you have a win ratio of If you have a win ratio, so you win 8 out of 10, right? So your win rate is 80%. That means, sorry, 80. That means you win 8 out of 10. And my win rate, right, is 20%. So this is so if you have a win rate of 80%, that means you out of 10 trades, you win 8. For me, out of 10 trades, I only win 2. Which person's one is better? Those of you online, which one is better? Yes. Anybody, which one is better? You have a win rate of 80%, and I have a win rate of 20%. Who has a better? Who is doing well? 80%, I mean. Let me see. I'll be having what are people online saying? They are saying 80%, 80%, 80%. Well, this is where I disagree with all of you. Well, it now depends. It doesn't. Now it's now a question of how much do you win when you're right, and then how much do you lose when you're wrong. Now, for somebody who has a win rate of 80% and their risk to reward ratio is, so for this person, their risk to reward ratio is 1:1. That means for every $1 they risk, they make $1. So out of 10 trades, let's say we both have an account size of 1,000, right? Out of 10 trades, so they risk 1%, they make 1%. Out of 10 trades, they make 8%. Do you understand? So they take 10 trades, they win 8, they lose 2, right? So they make 6% at the end of the day. They'll come out, they'll end up with 6% because they win 8, Abi? Yes. So that's 8%, and then they lose 2. That's 6%. So they will end up with 6%, Abi? So they've grown the account by 6%. However, I have a 20% win rate. But my risk to reward ratio is 1:8. Well, let's say 1:5. There was a time when I used to trade, and the minimum I go for is like 1:10. Now, I used to enter the market on a very small time frame then, and it was very profitable. Now, I win 1:2, I look at the markets and then I look for opportunities, I get involved in trade, but sometimes they run. I don't know, some of you online who have been joining my classes for years would know that I think last year I closed the trade on UJ that I've been holding for over a year. So you have fun. But it's just that I get into positions and the market goes my way because I have my own rules for how I manage my positions, and then sometimes they run and all. Now, my risk to reward ratio is, let's say, 1:5, right? And I only win 20% of the trades. Now, by the time I lose 88 trades, right, I've lost minus 8%, right? However, out of the 2 trades I win, I have plus 10%, right? Now, if you scale this up, you now start to see that, let's say this is the 1:10, right? Out of the 2 trades, I'll make 20%. And my 2 wins will be worth more than your 10 wins. Because at the end of the day, it doesn't really matter what the win ratio is. So I don't really, when currently now my win ratio on my trading is like, let's say anything between 35 to like 40%. So I'm losing about 6 to 7 trades per 10. So for every 10 trades I take, I'll probably lose 6, right? And well, I know how I'm doing. Do you understand? Now, so it doesn't really matter. But the problem is most people, they get into positions. Oh, they scalp. They try and make 2 pips. And most of the time, they'll make it 2 pips. But it's when they don't make it 2 pips and the market just begins to drop. Now, this guy is even trying because then he uses a risk to reward of 1:1. But most people who don't use stop loss, what do you think their risk to reward is? It's like 1:1 my account. Do you understand? So the only thing that will stop you is when you get to 0, Or, you know, when you get to the point where you can't sleep, but you know, those times where I used to have those then back in the years where, you know, I'll be waking up in the middle of the night to check the markets, to check the charts, to see whether anything is going up. Sometimes you want to even blow it. So if you have a defined risk, as you enter the trade, you know what you're risking. But you know, people think that the market is their godfather. So when they enter the market, is this, I'm trying to get this, my downside is all of my accounts. Now you might say, no, I have proofs on how I'll get out, but you don't actually. It's only if let's say you have $1,000 and you're now seeing negative drawdown of 400, 500. You say, oh, I thought I went through. You now close the 500. Do you understand? And then your account size now becomes, you know, minus, or, you know, now becomes 500. But then you do that 2 times again, and then you're out of business. So I don't really care so much about that. This actually the reason why position sizing is actually very important. You know, you want to understand what your risk is, and that's why in the first slide I said define risk, right? Accept risk and then eliminate risk, and then you can get to the point where you're, you know, you reduce your risk by, you know, managing positions and trail stopping and all of those things, or moving to break even. Okay. Okay, so we're slowly coming down to the end of the class. Let's see. What do we have here? Those of you online, I hope you guys are enjoying the class so far. As much as those of you here. Okay, so another thing you want to do is to avoid unnecessary pressure, right? This is very important. You know, many people, they see somebody who is trading and they want to become the person. So what happens is, but what they don't understand is, the one thing you don't want to do is to put pressure on yourself, right? That's why it's always, the advice is don't trade with money you cannot afford to lose. But then people would borrow money to trade. What are the odds? You lose the money. It just you know, is what do they call that thing? It's this law, I've forgotten what it's called. Where the thing you fear the most is what is most likely going to happen. And it's true. So you want to avoid unnecessary pressure. Don't quit your job to trade full time when you've not, you know, when you don't have the means. You need to have realistic expectation. Do you understand? You need to have realistic expectation.
It's Murphy's law.
Yeah, Murphy's law.
What's going to go wrong?
Yeah, it's like the thing you fear the most is what's most likely going to happen. So you don't want to psychologically you know, make yourself inept. And that's why you don't want to pressure yourself. So if you decide, oh, I'm going to quit and I'm going to make profits from, I'm going to live on my trading, and your trading is not good enough, or your account size is not good enough, so ask yourself, okay, so how much do I need to make? You know, how much do I need to make to be comfortable? As in, so when I don't mean, you know, when I ask this question, some people thinking, oh, they need to buy a car, they need this Ferrari, they need that. No, I'm saying, as you are now, how much is your expense? You fuel your car, you pay your bills. If you are married, you take care of your wife. You know, if you have family and you take care of them. How much do you, on the average, spend? Now, if let's say you spend 400,000 every month, just say, or let's say 100,000. Let's say you spend 100,000 on fueling car, fueling gen, you know, paying for bills, and that's too small actually. But let's just say, right? Now, if that's what you spend, and you know you now put all those pressure on your accounts to make that money, and let's say you're getting $1,000 account, right? Now in Nigeria, dollar is almost 1,000. So let's just use 1,000 for simplicity. So it means you need to make 10% every month, right, as profits, just to live your current life. Do you understand?
Yeah.
Because your expenses is 100, you know, 100,000, okay, 100,000 naira. So to live your current life, you need to be making the 10% of your $1,000 every month. And what are the odds that you're making the 10% of your $1,000 every month? The truth is, there's a very big difference between, like, at least the way I look at it, between wealth and rich. You can see a lot of people and they will appear richer, right? But the difference, at least the way I look at it, is you measure rich, right, with what you see, right? The amount you have, the assets you have, that's rich. But I measure wealth with time, saying, if I stop doing anything now, how long can I sustain my current standard of living without changing anything? So meaning, if it costs you $100K to live every month, if I stop working, right? How long will I still be able to maintain that 100K, right? How long will I be able to maintain it without maybe I used to buy full tank. Now, like, okay, let's be buying quarter tank. I'm now cutting down and trying to balance up. Do you understand? So in the same way, if you put all of those pressure on your account, you're like, oh, I need to, you collect money, your school fees or your house rent, and you say, I'm going to try and double this money. Or, with that kind of expectation, you're going to struggle. Do you understand? So you might not have the money now, it's good and fine. Trade with what you have, keep hustling, fund your account. The truth is, the people who really make the money in the market, they don't make as much of a percentage. So they might make 5% a month. They're averaging like 5% a month, or 7%, or 12% once in a while. But on the average, 5% a month. But on your let's say you have $1,000 account, $1,000 is still a lot for a lot of people. But let's just say $1,000. You make 5% on $1,000. How much is that? How much is $50? Will you feel happy?
Yes.
No, you will not do. In Nigeria,
someone making 100 that is living on 100,000.
No, we're not using you are trading the $1,000 account.
Okay.
Right? You're trading $1,000 account and you make 5%, that's $50 after 1 month. Do you think you'll be happy? You'll not be happy, do you know? You'll be like, man, I need to, something is wrong. Nothing is wrong. Do you understand? If we had 1 0 here, we don't change anything. No. Here's the beauty. Here's the beauty about trying to get better as a trader as opposed to trying to make money. Now, if you learn how to do this, make 1:10, and you only win 20% of your trades. And this is just an example. If you learn, you've done this over and over, you've tested, you've seen this to be true, and you're confident in it. Well, if you're trading $1,000 account, let's say you started with $1,000 account, and then you're now trading. At some point, when you make a cumulative, what did we end up with here? So that's 12%. I mean, so you make 12%. By the time you make 12% as profits for the month, let's say you are trading on the average, you're taking 10 trades a month. It's giving you this, you're winning only 2 of them, and you're making this RR. So 12%, you withdraw your profits. $1,000. 12% of $1,000 is what? 120, I think. Now you keep doing the same thing. You keep working, you're hustling, you're funding your account, and then you have a $10,000 account. You will not change anything. You're not going to change anything. It's just that now 1% of your account is no longer $10. It's now $100. Right? And 12% of your $10,000 account is no longer $120. It's now $1,200. And then you add another 0. You're still doing the same thing. You're risking 1,000 per trade. The 12% is what? 1,200, 12,000. Right? And then you add another 0. and this becomes $120,000. You're not changing anything, no? Do you understand? And this is why, you see those guys that are even the social media guys that are traders. Now, a lot of them are not even good traders, but even the ones that are good traders that are showing you those lavish lifestyle, right? The odds are now some of them are, everybody has. When I funded my first account back in 2015, yeah, 2015, $100. I turned the $100 account to 150. I think 150, 180. That's 80% growth, right? In like 2 days. So anybody can be lucky, anybody can. I don't really, somebody shows me, you say, okay, I've been trading, I've made so. Show me 6 months record, or not 6 months, show me a year, 6 months. Let me see what you've been doing. Yes, because then I can now deduce. You can find yourself in a good market at a good time, and then you make huge percentage. Anybody can shoot the targets randomly. But then the experts are the ones that will snipe it and shoot it consistently, they will hit around the target. So you see those guys that will show you stuffs and all. Those of them who are traders who are doing well, look at their account size, their real account size. Maybe it will be like, $200,000, $300,000. Now, out of $200,000, he makes 10%. That's 20K. He can afford to buy the car. Do you understand? Or, flaunt it. But you're looking at it as though he's making the money from a 2K account. Do you understand? And so when you're trading, you're approaching it like, I need to do like this. So you put yourself on necessary pressure. So the goal is to get to the point where at least for me, is to get to the point where, well, I can do that now already. It's just I love what I do. I can just retire if I don't want to. If ANZO says, and I say, Bishop, let's call it a day, I'll be fine. Nothing will change in my life. The truth is, what I earn as pay from ANZO is not even, it's fraction of what I really earn. Do you understand? So it's to get to the point where you can live off your account, but you can't live off your $1,000 account. It's not in Nigeria. But you can improve because you don't have the money now. You can't wait until you have the money before you improve. You have to improve now, and then you find a way to make the money. Okay. Yeah. Okay, so let's look at the next slide. Let me see if I have comments online. Okay, so we're slowly coming to the end of the class. We still have some more to go though. Let's see. Okay, so the next slide says give yourself an edge, right? So we've talked about, basically we've discussed this, where you need to understand that, your edge is different for everybody. You have a friend, both of you are trading. You guys are different though. Some people by default are okay with risk. I used to have a friend when I was at Ivy Markets. He funds his account like, let's say $5,000. Every 2 months or thereabouts, he will blow the money. Do you understand? He's a very good trader. He's a very profitable trader. Don't shake your head though. He's a very profitable trader, but that's just how he trades. He has money. That 5K would not shake him really, but he's okay with the risk. Do you understand? Where when he gets in, before, let's say between that 2 months, before he blows it, he would have probably turned the 5K to, let's say 30K or 20K or 15K and maybe withdraw and then it's trading with 5K. Now, by the time he blows the account, he knows, it's normal. He'll fund it again. He's a high risk trader. He has a system. He has his own. When he finds it, gets into position, he sees his setup. He hits it very hard. Now, usually when people say that kind of thing, they're like, he turned the 5K, he made 35K in like 3 months. Like, man. The question is, if you have the 5K, are you okay losing it? He's okay losing it though. Do you understand? He's very okay losing the 5K. But you like the results of when he makes money. But you don't like the results when it goes bad. So, but then you now try to copy him. right? So imagine somebody like that gives signal. Wow, right? Now you join, it's just like this all these Ponzi scheme. Usually it's when you join that you crash. Have you?
Yes.
Everybody's doing it, it's fine and good, and then you join and it's like, you start wondering, is it your village people? They are strong. No, it's just cycle of life. So let's say that kind of person is, he gives signal, it's heavy, and everybody's following him like that. When in the first month it goes well, second month it goes well, your friends are showing you their result. In the third month, everybody comes. Now the funny part is when you lose, you're losing everything. They have made profit. Do you understand? And so it's like, what is that person doing? Okay. Am I comfortable with it? Not the upside, though, because everybody is almost comfortable with the upside. It's the downside. Are you okay? So once you define risk and then you accept the risk for yourself, then basically you just eliminate it. I learned that from, who was that? Gerald Martinez. Okay, so now another point is you don't want to trust your heart when it comes to trading, right? You want to trust your education or trust the process, right? When you're looking for a wife and when you're looking for a girlfriend and all of those things, whichever it is that you're doing, you follow your heart. You say follow your heart. Okay?
Yes.
But when it comes to forex market, just forget your heart. Your heart is it does more harm than good. Okay, so don't follow your heart, please. Follow your system, follow your education, what you've learned, what you've backtested, what you're comfortable with, what you've seen to work. Because you open the charts and you see a very big bullish candle. All your heart is thinking is, man, if I had bought, you know how much I'll be on by now. You understand? But that's you deep down somewhere, you know that many times the trades that people lose or the trades that people make money from, they have no reason taking the trades, but then they'll be happy about the wins. Now, I usually review my trades, so the trades I take. In all cases, I make losses. I'm very, very, very happy with the loss. Meaning, if I see that thing again, I will take it again. Do you understand? That's the way you should approach trading. Where it's not about the wins or the losses. It's about, I think I wrote it down somewhere. Win or lose, I don't care. So all that matters to me is, did I follow my rules? So it's that. Just leave your heart alone, right? When it comes to trading, and then don't dwell too much on the past, right? You make profits, don't be overly excited, and you make losses, don't be overly down. As long as you follow your rules, right? As long as you follow your rules, that should be the thing that gives you joy or not. If you take a trade and you jump into the trade prematurely and there's no rules there to be followed, then don't rejoice over that win because it will then build bad habits. It's just like it will reinforce bad habits. It's just like, you see somebody who, you have a child, the child goes to another person's place and collects something. Let's say goes to another person's house and steals their remotes or steals something from them, and the child comes back. And let's say you need that thing in the house and you're laughing, you're reinforcing bad behavior now. So what happens is the next time the child's okay, he seems stealing is not that bad until they burn the person. You understand? So in the same way, it's not whether you win or you lose. It's about, okay, this trade, was this sound? Is this sound? Taking this trade, did it make sense? And then that way, you would grow. Okay, so yeah, you want to stop destructive trading behaviors. So as humans, like I said, this is what I just mentioned. We are creatures of habits, right? So we like to do that which is often repeated. This is from Napoleon Hill, I think. We tend to do that which is often repeated, right? And just like the child, if you reinforce bad habits, you keep doing it. So in the same way, if you reinforce taking trades without rules, right? Whether you make profit, it's better if you don't make profit because then you don't want to do it again. But when you make profit, that becomes really, really bad because then this part of your brain begins to think it is okay to do this. As I said, until the day, it goes really wrong. And that's the thing about like when it goes right small. But when it goes wrong terrible. What you want to do is the opposite, where if you're wrong, you want to be a little bit wrong, right? And then if you're right, you want to be very, very right. Like I get into positions, like I made mention of, expecting to lose, like, let me take this loss. Because I know that if I make enough losses, I'll win. Imagine if this is my win rate, right? 1:20. Now I used to trade like this at one point. Imagine if it's my win rate. And I know from my back testing and from my plan, from my edge, from refining my head and getting confident in the system. And I know that I lose 9 out of 10 trades. Right? Now the question is, do you think I'll be happy to make losses? Yes. Because the more losses I make, the closer I get to my 1%. As long as I stick to my plan, it's not a question of taking blind loss. Do you understand? As long as I stick to my plan, the losses draw me to my wins. Do you understand? Now, you don't want to do this, at least don't start like this. But I was very okay. As a matter of fact, my win ratio was, even though it was like this, I wasn't losing the 9. A number of them were hitting break even. You understand? So it was like break even. I might break even 8, maybe lose, or let's say break even 7, lose 2, and then win 1. You understand? And then I could have closed my profits earlier. I could have closed at 5 RR. I could have closed at 10 RR. But I understand that just 1 win or 2 wins. Imagine if 2 wins as 40 RR as opposed to 40 minus 8. I'm like 32. And then you're like, okay, now it begins to make sense. So we want to reinforce good habits, right? We don't want to reinforce bad habits. So when it comes to trading, your natural human emotions don't work, which is why I said at the beginning that to be a profitable trader, you need to be able to take unemotional, decisive actions over and over again. Now, the only way to fix the emotional part of your trading is to focus on rules, is to have a rule-based system, right? That's the only way to focus to be able to get to this point. You cannot get to this point because you hear what I said. It's not going to work. Everybody goes to service. They go to listen to the word of God almost every Sunday, many people at least. And they preach good things. But then when you look at the proportion of people who are going to church or going to mosques or going to where they learn about God, and then look at the proportion of people who are doing what is supposed to be in the word of God, it's like night and day. They're like, I don't know, I say that they're not hearing or what? They're hearing. So just because there's nobody you will show this my video to that will say the guy doesn't know what he's saying. Everybody will say I know everybody will say what I'm saying is the truth. Right? But then, next year, 90% of people will still be where they are this year. It's not a course, it's just statistics. Do you understand? So the only way to develop this unemotional aspect of trading is to focus on rule-based system and to follow it religiously. Okay. This will help put your emotions at bay and establish the principle for trading. So if that practice, you see it, you've seen it a number of times. So I know that, taking these 9 losses or these 8 losses, no wahala. I'm okay with it because I know my system. Do you understand that? When I started out and I'm okay doing, let's say I'm okay doing this on like a $2,000 account or 3,000 or 4,000. But right now I don't exactly trade like this. I make more, but I don't need to make more. I make more in the sense of monetary value, but I don't need to make 40 RR a month or 20 RR, even if I make 10%. Because now you're seeing where the value has shifted from. So the better you get as a trader, the more funds you're trading, you don't need to make that much money. But then the system, so you now start to refine your system. I still get points where I make ridiculous percentage. But it's the wins are not proportional to the, so in the sense of, so I might make 30 RR, for instance, in 1 month, and not RR, like 30% gain on my account. Now that's very rare. In my early stages, at least in my early stages when I became better, not early stages when I started trading. At the early stages when I started trading, I was blowing account left, right, center. Okay. But at the early stages from when I became profitable, maybe we were trading $1,000 account or $2,000 account or something like that. And then I'm looking to make bigger. Now I'm not looking to make, because it's always risk to reward. You understand? There's always risk to reward. So I'm okay waiting, scrutinizing my trades until it gets to what I like, and then get into those positions. And yeah, once in a while you get those runners that just explode, and will manage them. So always ensure to use proper risk management in your trading, as that is the only key. That is the only holy grail to success in trading. So I think the final words from Joe Vidic says, you want to limit your position size such that fear does not become the prevailing factor guiding your judgment. It's like if you open if you open 10 lots, so you have $1,000 account, if you open 10 lots on gold, if it goes up 100 pips, you're a big boy. You are very happy. But then the moment it goes, now obviously immediately you open the trade, you pay spread, so it will just drop. It will just be on negative. Every drop, your heart beats faster. Do you understand? At every drop, you understand, like every drop, you're just looking at the markets. You're pushing your chart up like this. You put the phone inside your pocket and then you walk around. You go, and then but the way you trade, the markets display for you. You open the trade, then you go and do your business, or you go and you open the chart. Maybe later you say, okay, because even if you hit your stop loss, you're good, no Allah. But then most of the time, I say stop loss, but most of the time, most of those people don't even take stop loss. It's just FOMC. No. Buy. Or sell, If it goes down 10 pips, close. That kind of thing. And you will make money, because I've done it. I've been there, I've done it. I've doubled account, I've tripled account. But you still end up where you start. In the sense that you make those money, then you give it back to the markets another time, and then you make some more, and then you bring some more from outside and put to the market, and then you make some more, and then you give it back to the market. When you win, you're just so excited. When you make withdrawals, flash it on social media, withdrawing, profit for the big, like, it's withdrawal season. That kind of thing. So, the real people that make money in this market, you don't even hear from them. Okay, yeah, so that's the end of our session for today. I hope you guys enjoyed the class. I had a good time talking to you guys. And then remember, now, how many we have persons, the number of persons watching online. Now, for example, these strategy classes, they're not always happening. They rarely happen. The main gem is not from this class. Usually it's from live classes that I have, and access to other recordings or courses that I've made on the ANZO. And then all you need to do, I hope, first of all, you need to have an account with ANZO Capital. If you've not done so, you need to have one. And then you need to fund your accounts. Okay. Now, normally, if you want me to teach you how to trade, like if you want to say, open an account, please, I want to learn from you. If you don't have $1,000, like at least $1,000 for like 3 months, and that will be 3 weeks every day. 3 days every week. So 2 to 3 days, not even 3 days, because the first month maybe 3 days, but then after like the first month, maybe 2 days. And then after 3 months, you're done. I'll try and impact as much money as I can into you. And that's it. Now, you can get access to a good portion of my training from ANZO. All you just need to do is fund your account. I think that's a very, very good fair deal. So if you don't have an account, you make sure you do so. And then if you do have an account, make sure you fund it. And then refer to your account manager to add you up to add you up to the Telegram channel and other resources. So there are other, let me see. There are classes on how to build Forex rewards that I've done. There are courses on advanced classes, and from basics. So if you're new to trading, they are from basic classes to advanced. There are different concepts explained in a Google course form, so you can get access to those once you funded your account, and then you can also get access to the how to build Forex Robot class once you've funded your account. And then you can also get access to the Telegram channel, where I do send out some trade ideas, not signals, but trade ideas, and also post links to live classes. I have live classes at least between twice a week. When it's Tuesdays, Wednesdays, I have live classes. We look at the market and look for opportunity. About 30 minutes to 1 hour. And yeah, the goal for you should be about wanting to become better as a trader, because that's the thing. To get to the point where you don't need, like, the truth is, most mentors, right, or providers, the idea or the way it's structured is such that you can't do without them, because then you need to keep paying. You need to keep paying for the knowledge. They're always bringing one new concept. Oh, this is the new system, or the signals, such that you have to keep that. So that's actually where the real money they make is from. But a real man, the goal should not be about. The goal should be, at least for me, should be to get to the point where you don't need me anymore. You're good. You understand? If you want to stay around, it's because maybe you need a mastermind of the community or something. But it's not because you need to be there. You're profitable on your own right. Okay. So yeah, that's about it for today's class. Today's class is probably one of the most important class, but yeah, we'll see. Most people, this is not what they want to hear.